please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh, with me Anuj and Sonia. Well, Wall Street once again gave us fresh highs, once again gave us positive cues, but by the time they have reached Asia and India, I think they'll peter down a bit. One, because it's, kind of markets waiting for the Fed, and emerging markets are likely to be somewhat impacted if the Fed were more hawkish than the markets are prepared for. But more importantly, it is the breakage in that oil pipeline sending crude again to, fresh highs, 2.5-year highs. That's a bit of a worry. And we didn't even need the crude price rise. We were anyway belaboring under fairly high yields yesterday. Now, that's a niggling worry. Why did the Bank Nifty underperform yesterday? Everybody else was 0.5% higher. Bank Nifty was 0.3% higher. The NBFCs were even lower. Yeah. That's largely because, you have bond yields at 7.17. It's almost 7.2. Now the crude prices can only push it up a little more. And, today we will get an inflation number which could well be 4.5. The last number we had was 3.5, 3.6. Okay, there are other base effect and other things, but 4.5 is like discomfort zone when we get that number. So we have that niggling worry, maybe the government will borrow more and stuff like that. So that might be the rein in today, not yet another inching close to 10,500 so easily.
Absolutely. Lata, good morning. Anuj, morning. So, rising oil is always a worry for as far as bond yields are concerned, right? But do you think rising bond yields is something that we're seeing globally? Because we've seen it in other markets as well. And could that be a new normal because the Fed as well is rising rates now?
There is no denying that we are going to get into a situation where things will start right, because the Fed is not tomorrow's hike, as well as probably 3 hikes next year. But, remember what Anuj always reminds us. Through the 2003 to 2006 period also, it was rising yields. But this is because of very good growth numbers. And India, I don't know if those graphics are ready. Look at the way in which they have shown the diesel and petrol price consumption. Clearly, growth is there. So if higher prices and higher yields come because of higher growth, no problem. If they come because of shortages and higher inflation, then it's a problem. But higher yields because of higher growth, I don't think the markets will be sad at all. On the contrary, they will cheer it. Anuj, your thoughts?
Yeah. So, you know what, Lara, the issue is that the global headwinds actually today could stall the rally a bit. Brent crude at 65 has the potential to derail the rally. Look, the market has had 3-day rally. I was talking about it last week, that last week was the time to buy. You don't chase momentum. You had 3-day rally. The market has now priced in a BJP win as well. Clearly, and Sonia was telling you yesterday that mid-cap index could close at all-time high. That's what happened yesterday. So obviously there's a bit of a resistance, a 20-day moving average resistance on the Bank Nifty at 25,470. And for the Nifty, you need to cross 10,400 to avoid forming a lower top. That's something that we'll find out, of course, today. IT is leading this market for last couple of days, last couple of weeks, in fact. IT index is at 52-week high. TCS and Infosys, while they are big stocks, they don't have the kind of leadership to take the market beyond a point. That needs to happen via Reliance or HDFC Twins. So let's see. The texture of this market is buy on dips now, clearly from sell on rally. But my sense is that this crude oil may present a significant dip or a significant buying opportunity for the market this morning. Even the Asian markets are sulking a bit, and we are very close to important resistance marks. So the strategy right now should be to wait. Just like last week or week before that, you were waiting for 40-50 point rally to sell into. Right now, you have reached a stage where you will wait for 40-50 point dip to buy, but buying the dips will make you money rather than selling the rallies.
Yeah, I take your point entirely, Anuj. There are a couple of important events. Let's listen to what the Fed has to say, how hawkish they sound about next year. As well, Gujarat election results. The way in which the markets reacted yesterday, I'm sure savvy operators in the market would have done their own bit of exit poll, and clearly they are happy. So it looks like maybe it will be an NDA government with a reduced majority. If it was something adverse, we would have seen that reaction yesterday. Since there was no adverse reaction, it looks like the market will be pleased with whatever result comes. But I don't think the market will go all guns blazing till Monday. That will be, 18th, when the results of the elections are announced, will be a day which the market will wait for. So these are two events, I would say. Fed event is left and the 18th results events are left. Before that, I don't know if you will go all guns blazing.
Okay, I guess the story of the day could be the higher crude prices. I mean, Brent is now at what, $65 a barrel, and that will have negative ramifications on a whole host of sectors as well, the likes of paints, tires, etc. We'll talk about all of that and more through the course of the show. But first, let's tell you what our wise experts have to say as we head into trade this morning. Mahesh Nandurkar of CLSA says it's not a panic situation, but tracking GST trends is now critical. Notwithstanding a weak underlying trend in GST collections, they do not foresee a big impact on the FY18 fiscal position, as the big float from IGST and higher disinvestment revenues will help. The bigger worry will be for FY19 as the IGST float income disappears. This could put upward pressure on yields, which would be a negative for NBFCs and wholesale funded institutions. A mitigating factor would be the current weakness in the GST trend being due to transitional systemic issues. Fiscal risks leading to higher yields, higher income tax rates would be negative for NBFCs, property and jewellery businesses, among others. On the positive side, they say tax benefits for insurance products might become more attractive, leading to higher premium inflows.
Okay, so quite clearly NBFCs is a spot of bother. They were the leaders of the rally up until 2 months back, but now I guess it's going to be profit-taking time. Let's get you some money market views. They are crucial today. HDFC Bank's Bhaskar Panda says the focus is now on the FOMC decision on the upcoming interest rate hike in the US. However, the USD INR has got wing from the probable outcome of the elections. Given this backdrop, Bhaskar expects the USD INR to trade within a range of 64.30, 64.50 for the day. On the bonds, Bhaskar Panda says the 10-year benchmark bond yield has been moving up. All eyes are now on the inflation number. He expects the 10-year yield to remain elevated and move towards 7.25 gradually. Now, that's even at 7.17, it's a number we have not seen since last August. So it's a 16-month high. So at 7.25, it will rise to probably a 20-month high. So, I mean, the yield is a spot of bother. No two ways about it.
Okay, the biggest spot of bother, of course, for the market today is crude oil, but here's Ronit with the world view.
So all green on the US markets. The Dow Jones as well as the S&P hit another record high. Remember, this year the Dow Jones has hit more than 80 record highs in 2017 itself. Now moving on to individual sectors, the energy stocks are among the top gainers, the likes of Chevron as well as ExxonMobil, as crude oil hit its 2.5-year high last evening. Moving on, one important event to watch this week will be the 2-day Fed meet that begins today. 90% of the traders are expecting a rate hike according to the Fed Watch CME tool. So that's one event to watch. Moving on to the European markets. The European markets also have closed rather mixed with the FTSE outperforming there. But the bank stocks, they were the top gainers, the likes of Barclays as well as HSBC, as the investors are expecting a rate hike in US. Moving on, Steinhoff, this one share that is giving competition to Bitcoin, after falling 80% last week, it's up 24% yesterday. Moving on to the Asian markets, the Asian markets are also open quite mixed here with the Nikkei as well as the Kospi there. And the SGX Nifty as well as indicating a tepid start for the market.
Okay, thank you very much for that summary, Ronit. But yes, it will be crude that we will watch. But the other big event that we will be watch will be the 2-day Federal Reserve meeting. That one starts today. Consensus is that Janet Yellen will announce a rate hike in her final news conference tomorrow. But what she says in the conference about the next year, about 2018, will perhaps move markets more. Jeff Lewis, Global Strategist, Capital Markets Group, Manulife Asset Management, joins us on the phone line. Morning, Jeff. Thanks much for joining. Well, the Fed Fund futures indicate almost 100% expectation of a hike today. So that's not what the markets will watch. What will you watch in Yellen speak?
Well, I think, yes, it's the statement. It's what she says. I don't think she's going to give too much away in terms of detailed views about how things might unfold in 2018. I think she's going to want to leave that probably to Jerome Powell. So I think she might have a few words to say about summing up her own tenure. And as you say, it's a foregone conclusion that we will have a rate hike. The market is still not taking the Fed at its word. looking at the futures curve, still way below the dot plot. So it will be interesting to see if she has anything to say about, say, developments in the labour market.
Yeah, exactly, the dot plot. Is it not possible that it might indicate hawkishness because of both crude prices as well as these monster job numbers that we are getting? Very good growth, PMI numbers from Europe. Is it possible that the market has to worry about something on the dot chart?
Well, I don't think we're going to see the dot plot moving much higher. As you say, there are sort of movements in terms of global economy, maybe fast cyclical growth in Europe, which could be putting a bit of pressure on global prices. But I think that the Fed believes it's on track. It's gradually raising interest rates, and I think it's giving more attention now to financial stability rather than just to the inflation numbers. So I don't think we've seen anything in the recent numbers to cause any surprises in the Fed statement tomorrow.
Jeff, hi, good morning. We've seen a rise in bond yields in the Indian markets, and that is in line with the spike that we're seeing in global bond yields as well. What's the sense you're getting? Could this be a new normal considering the Fed is hiking rates?
Well, I think if you look at the increases in yields that we've had, there have been particular reasons, say, in China related to financial deleveraging and some of the crackdown on funding and interbank and CDs. I think if you look at global rates, it's still very much just within the range. And particularly, I think we've seen that the U.S. Treasury 10-year yield has been well behaved over the last 6 months. Nothing really to suggest that it's going to burst out of those ranges. I think with India, obviously the oil price has had some impact on domestic yields, particularly sensitive to that. But I think Indian government bonds are looking pretty good value round about where they are just now.
Okay. In the very near term, how concerned would you be about the spike up in Brent crude? You mentioned it fleetingly, but you know, because India is mostly an oil importer, there is this fear and the kind of pressure that would also put on some of our twin deficits. What's your own sense?
Well, I think it looks a little bit extended short term on the technicals, but we have been taking a bullish view of oil pretty much all year. We think people were far too much focused just on U.S. shale and not looking at the declines in virtually all other non-OPEC supplies sources. And also we are now seeing global inventories coming down quite rapidly, and that's going to continue, I think, given the global recovery. So we would say that oil is moving into a new range, a higher range, maybe $60 to $70. Now, that's still relatively comfortable, I think, for both oil importers like India and for the oil exporters. So it's nothing really to be too worried about, but it's actually a positive signal, I think, that the global economy is going to be growing at an above-trend rate in 2018, and the higher oil price is net positive for the emerging markets.
Oh, yes. Clearly, the markets, equity markets are taking a positive spin off all those data points. Thank you very much, Jeff Lewis, for joining us. So, rate hike factored in. And Yellen, according to Jeff, will perhaps not say much since this is her last press conference. Well, one can also expect the reverse. It's her last press conference, maybe even more candid about growth or inflation fears that she expects in 2018. But in any case, it will be a widely watched press conference. Take a break?
Yes, let's take a break on that note. We'll come back with CNBC TV18's top 10 list of stocks to watch for the day. But of more national importance is what happened last evening. We congratulate the newly married Virat Kohli and Anushka Sharma, and we leave you with some moments from their big day. Well, let's take a quick look at what's happening with the global markets. The SGX Nifty is absolutely flat. The Dow, the S&P closed at record highs. And this morning, it's crude, which is the big talking point. So we're going to talk about a whole host of stocks leading to that. Our research team is standing by to give you the list of top 10 stocks for the day. Anuj, would that be the theme that you're working with as well?
Yes, Sonia. In fact, if I had to stick my neck out, I think Aban Offshore could well be the stock of the day today. It's a stock which last time also I pointed out when crude had this rally. It rallied from 160 to 220 when oil surged, and from 165 it retreated back to 61. This stock has also corrected back, not of course to 160, but to 200-day moving average. It's a 200-day moving average, 20 and 200-day moving average, and has got a macro trigger for it in terms of this big spike in crude oil. And look, the fact here is this may have confirmed that crude 60 is the new 54 crude oil, and we are looking at higher levels. That rally is, it's sort of confirmed the crude rally, and that would change a lot of things. So that's why I think Aban could well be the stock of the day. The other stock that I want to talk about, it's a stock that I first flagged off when it was 45 rupees, is HBL Power Knife. Yesterday, big surge in power stocks, 4 times jump in delivery volumes for this stock, consistently making new highs. So that's also a stock to track.
Okay. Well, just taking off from where Anuj left off, the crude prices will be another reason why you could see bond yields holding on. My own sense is bond yields are exaggerated at this point in time. Perhaps 7 to 7.05 is the base case. Things always swing. So, the 7.17 is an exaggeration. But the exaggeration will continue for today because of crude prices and because of the CPI numbers that are due later today at 5:30. And that will mean, of course, negative news for NBFCs as well for many of the banks. I mean, one can go into a detailed analysis of how some banks will be more affected than others, but, that is going to be a problem.
Okay, well, talking about banks, PNB will be in focus this morning on the back of the QIP of 5,000 crores that they've announced. Abhishek joins in to give us more details on all of that. Abhishek, over to you.
Well, Sonia, PNB has announced the QIP of 5,000 crore. Now, the offer price is at 168 rupees, which is at close to 3% discount to yesterday's closing price. Now, the Tier 1 ratio can improve by 107 basis points to close to 10%, that is 9.96%. The equity dilution is seen at 12.3%. So, therefore, the government holding can come down to 57% versus 65% currently. The book value will also decline by 4.4 rupees for FY18 to 199 versus 203 earlier. Back to you.
Okay, thanks a lot for that. Well, Sonia, you stand in for Ekta and tell us about Dr. Reddy's. They have got a tick from the US drug authorities for the Bachupalli plant.
Yes, they have, and they've got an EIR. So for the uninformed, an establishment inspection report is all it means is that the facility is found to be acceptable by the US FDA. So that's a positive coming in for the company. Remember, the Bachupalli plant is a very important formulations plant for them. More than 50% of their existing US business comes from the Bachupalli plant manufacturing. And, this is a positive development because it removes a key overhang from their business. They have now successfully closed out all the pending 483s from the April inspection. But I spoke to a couple of analysts. They indicate that from a compliance perspective, the clearance of the Duvada injectable site is the key monitorable for the company going ahead. But today there'll of course be a relief rally in the stock. However, the stock has been a big disappointment this year. It's down 30% for the year.
Yeah, I mean, pharma itself has not been the best performer. Okay, speaking of pharma, Natco Pharma also in the news, Naveen?
So the stock, as Sonia pointed out, Natco has also been flattish in the last 6 months. But important point, the company board has now approved a QIP and the floor price is set at around 937 rupees. Remember, this is 3% down as compared to the last closing price. If you go through the con call, last con call also, the company had alluded to the fact that they would need fresh funds for investments in India as well as the rest of the world in countries like Singapore, Taiwan, etc. Apart from this, the company wants to invest in US complex generics. So this would be a reason for the utilizations of the fund. On the other hand, the valuations, stock is trading at around 20 times FY19 valuations, fairly valued as compared to its peers. Technically, I expect the stock to be in red, but won't be surprised if it moves back to the green today. Back to you.
Okay, Naveen, thanks a lot for that. The big story this morning, of course, is the big surge in oil prices, but a couple of other commodities as well. Manisha, good morning.
Good morning and thank you for that, Anuj. Well, it is crude oil prices, but definitely is making news. 2% up overnight and is nearly a percentage point higher in the Asian markets right now as well. It is trading at a 2.5-year highs, and the latest trigger comes in from the fact that you have a UK pipeline which is shut, has developed a crack and may not be up in activity for next couple of weeks. And this is the main pipeline that connects 85 offshore to UK mainland. And with the winter demand coming in from London and other countries, this kind of a development definitely is adding premium to prices. Apart from that, it also has to do with a bit of weakness in US dollar. Also buying on the fact that you are perhaps looking at rebalancing sooner than later as per statements coming in from many OPEC members is yet another factor for the prices trading at a fresh 2-year highs, as I said.
Okay, thanks a lot for that. And Manisha, the stocks would be what? Tire,
paint companies, yeah.
And maybe even oil refiners. Yes, absolutely.
Okay. Well, IEX is the other stock that we're looking at this morning. Let's quickly hop over to Anisha and find out why. Anisha.
Well, yes, Sonia, actually Jefferies has initiated coverage on IEX and the target price is 1950, signaling a 27% upside from current levels. Now they say that the company is in a sweet spot given the leadership and the market leadership position that the company has in this space. They also expect that the short-term supply market would grow in size, and they make a point that over the last 2-3 years, the prices in the short-term supply market has been lower than long-term PPAs, signifying that this market is set to expand. They like the fact that the dividend payout ratio is high, keeping the ROEs above the 40% mark. They like the overall visibility, which is even higher than the likes of Power Grid and NTPC, and hence they're positive on this stock with the 27% upside. Expect maybe the stock to react positively to this brokerage action.
Okay, thank you very much for that. Let's get to other stocks that will be in the news. Ronit, you have a list.
Yeah, so mostly results, still coming in. So I started with V2 Retail, a good set of numbers. Remember, the stock is up 5 times this year, as well as the revenues are up 33%. And the EBITDA was up 44%, as well as the PAT more than 4 times up at 4.9 crores. Moving on to Nandan Denim, capacity expansion finally kicking in for the company. Steady set of numbers coming in. Revenue was up 37%, as well as the EBITDA was up 29%. But the margins a slight downtick largely due to higher cotton prices. Finally, Lasa Supergenics, this company has recently demerged from Homemakers Specialty, and the revenues disappointed. Revenues were up 10% only, as well as the EBITDA was down close to 16%. The margins were down 600 basis points. And finally, Repro India. Remember, the stock was up locked in upper circuit yesterday, but the revenues came in lower by 7%, as well as the net profit was down close to 86%. So you can expect the stock to be in the red.
Okay, yes, we featured the company yesterday on our show as well. We had them with the veteran investor Vijay Kedia.
And we also pointed out that while there's a lot of optimism, it's not showing on the numbers yet. Whether it will show up in future is something to find out. But of course,
but it is an elevated company. Tesla and Netflix also have the same problem.
Exactly. So I mean, but these are backward-looking numbers, of course. But for whatever it's worth, it was up yesterday, so there should be some downtick.
And complete overhaul
today
of the business, right? From printing now to digital, so there's a cost involved as well. But here's a quick recap now of our top stocks. Expected to gain today are names like Aban Offshore, HBL Knife, PNB, Dr. Reddy's, IEX, V2 Retail and Nandan Denim. While stocks expected to be under pressure this morning could be IOC, BPCL, HPCL, HDFC, Bajaj Finance, Indiabulls Housing, the Nifty Bank, the PSU Bank Index, Natco Pharma, Lasa Super Generic and Repro India. We'll take a quick break, but our technical experts are lined up on the other side. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be with us.